Hello friends, how are you? Breaking news today. Vietnam's National Assembly on Wednesday approved raising the economic growth target for this year and also voted in favor of major infrastructure projects, including the country's first nuclear power plants and a rail link to China, reports Reuters. Lawmakers approved a new growth target for 2025 of at least 8% proposed by the government, an increase from the previous goal of 6.5% to 7%. With faster economic growth, macro stability must still be ensured while inflation must be kept under control, the government said in a report to Parliament. The report said inflation would be kept between 4.5% and 5% this year. Parliament also passed a resolution supporting the construction of a new railway linking a major seaport in northern Vietnam with China. The project is expected to cost $8.3 billion, part of which to be funded by loans from the Chinese government. Vietnam, a regional manufacturing hub heavily reliant on exports to drive its economy, has been seeking to ramp up infrastructure investment to boost growth. Lawmakers approved policies to develop nuclear power plants, the first of which is set to be built by the end of 2031. Under the policies, the government can appoint contractors to construct the plants without holding a tender process. Parliament approved rules that would allow Elon Musk's Starlink to provide satellite internet services in the country while maintaining full ownership of any local subsidiary. And a plan to offer financial support to local firms that enter the semiconductor industry was also supported. On Tuesday, the Assembly approved a bold bureaucratic reform plan that will slash up to a fifth of government bodies, as it tries to cut costs and improve administrative efficiency. The Philippine Central Bank on Friday said it was reducing the reserve requirement ratio, RRR, for banks by 200 basis points from late March. The reduction will bring the reserve requirement for universal and commercial banks down to 5% and will take effect in the week of March 28, the Bangko Sentral ng Pilipinas said in a statement. The reserve requirements for digital and thrift banks will fall by 150 bps and 100 bps, respectively, on the same date. The announcement comes after the BSP last week unexpectedly kept interest rates steady at a policy review. At the time, Governor Eli Remolonas said the BSP would likely further trim the reserve requirements for banks, but the timing was uncertain. The BSP last cut RRRs in September by 250 basis to 7%. The BSP reiterates its long-run goal of enabling banks to channel their funds more effectively toward productive loans and investments. Reducing RRRs will lessen frictions that hinder financial intermediation, the central bank said.